Thank you, Ruth. Good morning, everyone. Welcome to today's overview and scrutiny meeting. Item 1 is the minutes of the last meeting, which was held on the 3rd of June. Do you have any members who wish to make points on those minutes? I see none, in which case are members happy that we accept those minutes as a true record? Unanimity, thank you very much. Those minutes are now accepted. Item 2 is apologies and substitutes. Ruth, do you have apologies and substitutes, please?
Thank you, Chairman. We've got apologies from Councillor Ian Martin and Councillor Robert Kyburd.
Thank you very much. And I think we've got Peter here as substitute. Welcome, Peter. Off the bench, I remember. Chairman's announcements, I have none. Items of urgent business, I have been informed of none. Declarations of interest, do any members have declarations on any of the items coming up that they'd like to make now? Seeing none, thank you very much. Item 6 is non-members wishing to address the meeting. As you all know, my policy is to allow members to speak on any item, whether they are a member of a committee or not. But I haven't been informed of any members who specifically want to address the meeting who aren't members of this committee. And I see none presently, so we'll move on from that item. Item 7 then is the commercial portfolio update, which Councillor Hewitt is going to be leading on. Can I leave that in your capable hands, Paul? I believe you have a presentation to provide first.
Thank you, Chair. Chairman, members, I'm delighted to present the commercial property update for you. It's been a long time coming with rescheduled and delayed meetings, competing with removal of lockdown provisions and work on this centre. But we're finally here. I plan to introduce the report before passing on to Ralph and the rest of the team to cover it in more detail. Management of commercial property is an essential part of our activities as a council that enable our businesses and our residents to thrive. Over the last 5 years, our assets have generated some £15 million of return, around £3 million a year. This has enabled us to build and develop our vulnerability in our MTI initiatives, to name but 2. Without our commercial property, we'd either simply not do this or increase our council tax by around another £70 per Band D property to raise the £3 million or so required each year. We adopt a proactive approach to managing our £45 million property portfolio, blending size, yield, tenor and geography inside and outside the district in a portfolio managed over property type and time. We look for uncorrelated assets. We seek to minimise concentration risk befitting a council of our size, our reach and our resources. And this final piece, Chair, is important. In my day job, I consult with portfolio managers investing from the billions to the trillions in the UK, in Europe, and in the US. This scale allows detailed yield, real-time data, huge resource investment, and specialism. But as a rural council, whose asset management team fits within our wider remit of providing services to residents first and foremost, we cut our investment cloth accordingly. We have a small but dedicated team who know their areas well. They have great empathy and great respect to and from the tenants whom we serve. And as a result, as an investor, we still seek and maintain a yield for our portfolio of about 6%. That is no mean feat, given the fact that base rates since 2010 are measured in fractions of 1% and government bond yields produce similar returns. We are restricted in our real estate choice, but also face moral hazard in our attitude to our tenants. We will pursue monies owed aggressively where we have to, as would any investor. But we're also mindful that many of our commercial properties are in our own communities and many tenants also live as taxpayers within our district. As such, we adopt a supportive stance on portfolio management, seeking rent deferrals and supporting our tenants wherever possible should they encounter difficulties, a position that has not gone unnoticed over the last 12 months. One of our service outlets in Durham recently told Brett and the team, "We cannot thank Breckland enough for their support here." And another in Thetford said, "Thank you so much for supporting us in this time of need." Chair, like any landlord, the last year has been tough on our portfolio and on our results. We've had our fair share of CVAs and rent restructurings, especially for tenants in the retail and service sectors. but we've also taken on new tenants, keen to invest in our communities and in our towns. And the proactive and supportive stance adopted by our team, sometimes in collaboration with other elements and groups within Breckland, means our property returns are better than both national average and locally compared to councils nearby. As a result, our planned outturn for this year is still in the region of our long-term 6% yield. It's in this context, Chair, that I will now pass on to Ralph and the team who are with me today to provide further details of the report in front of you. And if I may say, some of the information in the appendix to this report, as you are aware, remains commercially sensitive, Chair. And I would, as you would expect it to be, I'd respectfully remind, please, everyone to maintain that confidentiality in any questions or observations you may have for me and the team. Thank you, Chair.
Thank you, Paul. And just to remind members, if you do have a question that is going to dip into the appendix or any other commercially confidence issues, please indicate beforehand, and then we'll save that until the below the line section of this report. Yes, absolutely. Ralph, if you want to commence the proceedings.
There we go. Thank you very much, Chairman. Actually, Councillor Hewitt has probably covered most of what I was going to say anyway. Obviously, I'm very pleased to provide the report, provide scrutiny of the report, to give them the update of the position of the portfolio for the last year and tell you what the outturn position has been. As Councillor Hewitt has mentioned, it's been a very, very tough year. So I think the results hopefully show how well we've managed to sort of make the property portfolio perform as best as we can in the current year. So I wasn't actually going to add any much more than that to the report, and happy obviously to take questions on the report and the content.
Thank you, Ralph. Do any members have any questions they'd like to ask? Councillor Burt.
You knew I'd have one. So I'm very pleased to actually see that our portfolio for helping small businesses and our business units is still being widely used, and we still have good occupancy. Question which has come up for some time, and I've been unable to get an answer because of confidentiality, but I was told that we could have some answers once this is completed, and that's the sale of the Green Britain Centre. So I understand from a press release, because that's all I had to work on, that it's been sold to Arbortech Forestware, which is sounds an interesting company. I probably need to go along there and see what they offer. But what was the sale price, and what's the net capital value which is returned to Breckland residents?
I'm going to just check with Ralph whether that's going to need to be below the line as an answer.
Sorry, Chairman. Yeah, so that information isn't in the public domain and wouldn't be prudent, obviously, to be in the public domain. It's commercially confidential. So if we did want to discuss that, it would have to be below the line.
Okay, so Councillor Burt, I'm going to park that question until later in this session. I will then have a motion to go below the line where we can discuss it. And I know what your objections will be when I try to pass that motion, and then I will explain why those objections are invalid and then we should be still going below the line. Any other councillors who have questions on the report above the line? Councillor Eagle.
Thank you, Chair, and thank you both to Ralph and Paul for an excellent and comprehensive report. Just my question is just really expanding what you've already said. Is the council looking at expanding into small office space, particularly in the market towns? Because the information I've received nationally is now that even larger businesses are looking at having small local offices in places again. And obviously, if we've got those sites in the office above shops or anything else in any of our market towns, you know, it makes it attractive for them, and it's good for our market towns because obviously it's increasing footfall and perhaps attracting people to live and work in Norfolk still.
I think that absolutely would be part of our investment strategy. You know, we need to make sure that we've got a portfolio that's performing as well as it possibly can be. So we're always looking at the performance of the portfolio. in terms of whether there's any disposals and acquisitions we can make off the back of those receipts. The investment we make off the back of those receipts absolutely has to match the parameters that we want to achieve from the portfolio. So the market's changing a lot, obviously off the back of COVID. We did see a sort of an exit in some of the portfolio in terms of the high street businesses. We've seen a decline in the office market completely, and that's not just obviously in Breckland, that's across the whole of the country. But like you, I was reading some information last night about how sort of some corporations are trying to find local centres for local office accommodation in much smaller offices than they've had previously. So we need to adapt to that, and we need to find where we can sort of seek those opportunities to help those businesses in Breckland.
Thank you, Ralph. I've got Terry, then I've got David, then I've got Mark. Terry, go ahead.
Thank you, Chairman. Thank you for the report, Ralph. Unsurprisingly, the one I was drawn to is the business centre in Thetford. I drive past it every day, so you can appreciate while it's sort of top of my mind. I was just curious, the occupancy level is remarkably consistent over a number of years at 84%. Is there the 16% that's not let, is that sort of permanently not lettable space, and therefore should it really be part of the target? And if it is lettable, what are we doing to promote that? Because it's a consistent figure there. I'm aware, as sort of Fabian alluded to, there is demand within Thetford for smaller units. And I was just curious, what space are we talking about there? Thank you.
Thank you, Councillor. Yeah, so it is consistent, but what I would say, if you looked at the sort of tracks, the occupancy across all of those years, it varies throughout the whole of the building. So it's not just sort of one particular space that's causing a particular issue there. And what we're obviously looking to do all the time is to think whether the spaces are configured in the right way with the right layout. So obviously, if we need to sort of like change the spaces, make them smaller, make them bigger, we've got the ability to do that, provided the capital investment obviously stacks up and we have a sort of a business case to make that return. So yeah, it's not one consistent space in the building. It shifts around the building according to what the demand is at the time.
Thank you, Chair. Likewise, I'm delighted to see this report, and the point has been made with regards to the fact if we didn't have this portfolio, what impact it would have on the residents in terms of council tax. It's absolutely brilliant. It's only a small point, but in terms of the vacant properties, I think I'm correct, Ralph will correct me if I'm wrong, obviously, on the main portfolio, 2% of our commercial properties are currently vacant. Is that correct, Ralph? Oh, sorry.
Yeah, that absolutely is correct. Yeah, it's at 2%, but there is a lot of churn in the property. So we have people coming in, we have people going out. So that's not a sort of a static sort of like position, but that is 98% at the current time.
If I may, a supplementary, is there any particular type of property that we are finding difficult to let at this particular time, in the sense of that 2%? Thank you.
Obviously, I'll repeat what I said about coming out of COVID. Actually, the office market has been difficult. So where we've got some offices that sit outside of the two business centres, we've had to look at different ways to sort of like create some incentives to sort of get some new tenants for those offices. We've been really successful in some of those. That would have been a lot lower sort of about 6 months ago, but I'm really pleased that we've managed to sort of create those incentives to get those units let. But it's probably the office market mostly, because that's our second largest sector within the portfolio, where we've probably had the biggest challenge, I would say.
Yes, thank you, Chairman. Just a quick talk about the business centres both in Dereham and Thetford. I'm gratified to see that Dereham is now ahead of Thetford. It always used to be the other way around, as my recollection. I think the figures I have for 2015 is 74%. But Thetford has remained remarkably the same, about 85% from 2015, and I think all the way through. So I'm pleased to see that. I'd like to know how you've got that up to nearly 95%, 92%. But also there's a disparity in, obviously, Thetford is less occupied, but actually renders more rent. I just wonder why that was.
it basically comes down to the valuation parameters of that location compared to Dereham. So you've got the A11, you've got the sort of like the investment opportunities there is creating that sort of like increase in value. In terms of Dereham, and why that's sort of higher, you know, it's really pleasing to see that higher than it has been in previous years. But I think, again, it goes around to what's available in the market in that location. So in Thetford, there is more competition for office space. Obviously, in Dereham, there's probably less competition for that type of office space. So that's probably why we've seen an increase in that percentage let over a period of time.
Thank you, Ralph. Thank you, Mark. Any other members above the line? Fabian, go ahead.
Thank you. Just a question. I'm assuming that some of our properties have restrictive covenants on them for clients coming in, anyone we attract. So say, for example, if someone takes on a warehousing space, will we be flexible enough with those covenants? So say they want to have an open trade or a counter to suddenly do some actual face-to-face customer selling rather than say do it online or just using the storage would be fairly quick and responsive to allow them, because obviously if they've got someone on the counter, they're allowing, you know, probably employing someone else, so it's a win-win. So I know some people are fairly and other people are quite strict on their covenants and it causes problems and loses clients, so just responsibly.
Obviously, where we've got situations where units are next to other units in a sort of courtyard or terraced area, we have to consider obviously the impact of use on other uses in that space. So there are some where we've got some sort of covenants on restricting the use, but generally speaking, I would say particularly in the industrial sector, which is what you were referring to, we don't tend to restrict that at all. Obviously, they have to get their own plan and permission to make sure they're in line with any sort of statutory change of use in terms of the planning. But if they want to sort of like change the property, change the use in the property, provided they get consent for us, we're usually quite flexible on how we can, you know, achieve that for the tenants.
Thanks both. Seeing no other members with questions above the line, I have two. One is, Paul, you mentioned about the moral hazard of having taxpayers who are also our tenants and the issues that throws up in the event of arrears. Have we considered investing in areas outside of the district to look at avoiding that issue? And my second question is, at the moment, this council is beautifully low on debt. Have we considered borrowing to invest in commercial property either within the district or without? And what are your thoughts around that?
So on the debt issue and the sort of the difficulty with that, yeah, it is challenging, obviously, because we are the local authority. So we do take quite a strong line, you know, in terms of sort of like debts. Obviously, that's been exacerbated significantly, and we've had to take a different approach, as Councillor Hewitt said, regarding sort of like the situation with COVID. But we obviously have got property outside the district already. I'd probably say it's as difficult collecting debt, whether it's inside the district or outside the district. There's putting aside the situation of who we are. You've still got the issue of, you know, are you going to be able to collect the debt, or you're not going to be able to collect the debt? And that I would say that probably doesn't really sort of like, in terms of what the approach we take, make any difference to the approach and stance that we take with those sort of like tenants at all. And it's better to keep a stable, consistent approach rather than sort of setting precedents for one and then, you know, causing a problem with another. So we have a very sort of consistent and stable approach to that. Borrowing to invest, we haven't done yet, is the answer to the question. We haven't had to do that yet, but I think as things progress, and I think as the portfolio progresses and it becomes more aging as time moves on, we absolutely need to look at where we invest and where we put our sort of like resources to create that type of return as best as we possibly can, and probably look probably wider, you know, than just sort of commercial property. Commercial property provides one yield. There may be other opportunities other than sort of commercial property to provide yields that are equal or better than the 6% that we're currently getting. We need to investigate that and find ways to sort of bring those opportunities forward for the council.
And just to push you on that then, because obviously the returns for the council would be substantially improved if it were funded mostly or entirely through a debt raising from Public Works Loan Board. When do you suppose you might be able to return with some proposals around that?
I will start before I pass over. You are aware, I mean, clearly we're aware, and our Section 151 officer will be jumping up and down, apoplectic at the moment, that there are clear restrictions in borrowing specifically for commercial returns, and Thurrock more than anything proved that you overborrow, you see a downturn. From that perspective, everyone gets in some difficulties. I have always been, I suspect, we might share this view that actually certain borrowing in certain locations under certain conditions, as long as those conditions meet our operational rather than our pure investment side of a council, is always worth considering. But at the same time, I suspect that we know it increases operational risk within the business. And from that perspective, operational leverage within us, if we think about it as a commercial entity moving around. But I think looking ahead, answering your question specifically, Chair, we will always seek opportunities. Part of the challenge that we have, wherever they may be, part of the challenge that we have is that there is currently too much capital in the asset management and investment space, also looking for opportunities. And so we don't want to chase prices up and yields down in order to invest on principle. But equally, we are very mindful that our small team punch above their weight already and produce our taxpayers at quite a significant benefit in terms of the commercial returns that they get. So never say never.
Thank you very much. I'm only conscious because I have raised the point previously, and those opportunities remain out there, no doubt. Councillor Burt, do you want to do an above the line question?
I do. It's really a follow-up from your comments on investing outside of the area. And I recognise that, yes, the moral side of things where we have members or businesses which might be in financial difficulty. However, there is a balancing side to be had here, and that is if we're investing in businesses within our district, then of course we also benefit from the business rates that they bring in and the employment within the area, which brings riches within Breckland. And it is very important that we actually balance those more difficult things to calculate within this this net sum of where we're going to invest. So it's really just a comment. Thank you.
Thank you very much. Yeah, go ahead, Fabian.
It's only following on from actually your point, Rodri. Just expansion, just as a quick point. And have you ever thought about purchasing agricultural land? And just thinking at the point more the smaller areas, because with the changes in the agricultural subsidies, and it's going to be more on the ELMS, the Environmental Land Management Scheme, small pockets of land which would have massive benefits to us on our environmental objectives. So some water meadows, because the subsidies, grants, payments to that would give that sufficient yield, although I would say the rental value may well be low. And obviously we would it would tick our boxes on achieving our environmental schemes as well. I'm not asking you to buy 10,000 acres in sort of thing, but you know.
I will answer briefly, then Ralph might give a more considered answer. I think there are always investment opportunities, and actually as a council we have not just commercial considerations, although that's where the commercial property team is really focused. We have social and community obligations as well. And I think we need to have a challenging, robust debate, as sometimes a council that says, if we have a commercial team that are tasked with generating a 6% return, that is the objective. If we have a commercial team that's tasked with generating a societal return, and therefore we can lower our objectives in terms of a specific target yield, and as such invest more in terms of promoting some other elements like the green agenda and community assets, I think we have to really consider that. But we also have to be aware of the fact that the current contribution with a specific target generates a very specific return. And as you point out, that return will fade. Yields are lower on agricultural property. Yields are a lot lower on private housing as opposed to commercial property. From that perspective, we just need to be aware of the fact that if we move in one area away from a pure commercial target, then actually the commercial target will also come down and the investment required to get the yield will go up.
I was only going to add to that, which I think Councillor Hewitt was alluding to. It's a case of choices, isn't it? You know, in terms of where we make that investment, and as Councillor Hewitt alluded to, we can make choice to invest in alternative property, land. Our goal, obviously, is to create the best, in particular in terms of the investment portfolios, to make the best returns that we possibly can to offset, obviously, any other decisions that the council needs to make in terms of sort of like the budget. So we'll always look at sort of like optimum returns where we can across any sort of like property or land that we can sort of acquire. But the team currently is focused on the commercial property because that's where our sort of core skills sit. So those smaller sort of startup grow on space units, etc., which we do very well in, and the team are very skilled at, to get the net sort of 6% is where sort of like our expertise and focus is at the minute. But there's nothing to say we shouldn't diversify and look at it. But as Councillor Hewitt says, it will be a case of those choices and whether those yields will be strong enough compared to the wider yields against the wider objectives that the council, corporate objectives that the council's got in terms of vulnerability, sustainability, and we need to obviously look at that in terms of our investment as well.
Yeah, I wasn't alluding to sacrificing fund, because there's certain parts of the agricultural sector which will decrease with that, but there are areas there. So I was trying to sort of allude to we were having a double win. You were getting a 6% return and we were achieving another objective on the same point. But if you're just reassuring the committee here that nothing is off the table, then I'm content.
Very simple question. Who decided that the 6% return was the target and why?
Okay, so what we do each year is we do the yield analysis, and we look at the property and how it's performing as a whole portfolio. We look at each individual property, and then we sort of like that is the average across the whole portfolio. And then each year we look at that and we think to ourselves, what is the property portfolio doing? What's the market doing? How does it compare to what the other markets are doing? And then we adjust our target according to what we're seeing in terms of benchmark across the country. So for instance, and we always try and sort of stretch ourselves on that sort of like performance target, because otherwise it wouldn't, if we made it easy, that wouldn't work as well. So we know, for instance, you know, across the country we're seeing sort of average sort of prime yields of about sort of like 4.5% across the country. So this is in excess of that. Bearing in mind this is a net yield, so this is a measure of obviously what the yield is after we've taken into account all of our expenditure, all of our overhead and costs. So we adjust that each year, much like we do the sort of like the targets on the other key performance indicators, and make sure that we're stretching the team and stretching the service to get the best that we possibly can out of the portfolio.
Should this be something that's open to discussion and presentation, perhaps here before that target set?
I believe it already is, and that when we have our management targets and key performance targets, we review it each time. So when that next comes back, you are welcome to raise some points around it then. Terry, I think you wanted to ask a question.
Yeah, I was just going to follow up on the point about energy performance certificates and thinking sort of about the work that the council's undertaking, sort of environmental sustainability. Presumably, Ralph, when those certificates are obtained, they're sort of used to help inform the capital programme and any investments to improve the sort of energy performance of the portfolio that we have. I mean, I don't know what and the sort of average performance is of our property, but I'd like to be reassured that we're working towards improving the performance. I'm sure you'll say that we are, but it'd be nice for you to confirm that. And sort of linked to that, many years ago when we had a economic development team at Breckland, there was an awful lot of advice given for firms on how to reduce energy consumption, which was really successful, I thought, when it was around quite a while ago. Does that sort of work still go on? Do we sort of liaise with our tenants? Probably less, your department more so others, but it'd be nice to know that actually we are actively encouraging our own tenants to be more sustainable. Thank you.
Yes, what the government introduced recently, I say recently, is about sort of 18 months ago, was something called the minimum energy performance standards of property. So no property can be sort of like let or sold without a sort of an EPC that has a minimum energy performance standard. The government's looking to increase that standard. What we're trying to do, which is why in the report it refers to the number of sort of energy performance certificates that we've obtained, is because we're obviously going for a programme of sort of getting all of our properties into that sort of particular space where they've got an energy performance certificate. Obviously, the survey that goes along with that certificate informs us what we can do with the property to sort of improve the property. It comes down to an investment decision, whether it's whether we as the landlord should improve the property, so obviously to improve the energy performance, and also whether that's going to increase the lettability of the property. I would say that more tenants are getting more switched on to that, you know, as time goes on. So we are getting more aware of it, I guess, as a commercial landlord, to make sure that our tenants, our properties, are as energy efficient as possible. It wasn't like that 10 years ago when we were trying to introduce green leases and things like that. You couldn't create that same sort of attraction of tenant. But I think that's sort of obviously changing significantly, and sort of obviously we work with the tenants as much as we can to improve the property, despite the sort of like age and condition of it. But it does come down to where the investment obviously allows us to sort of like make those changes.
Thank you all. Are there any final questions from members before I consider a resolution to go below the line? Yes, go ahead, Philip.
Thank you, Chairman. Could I ask, in the main portfolio, the occupancy rate was in fact up on the previous year, but the outturn of income was 15% lower, presumably due to COVID. But are we likely to see any of this come back in the next year?
Yeah, you're absolutely right. Obviously, what we've tried to do through COVID, as the report says, we've tried to sort of stabilise the portfolio as much as we can, stabilise the businesses in those tenants in those units as much as we can, taking a long-term approach. Obviously, trying to make sure we sustain those businesses and that employment that they create for our residents. So we've had to go into lots of different arrangements with businesses, as Councillor Hewitt referred to. We've gone into deferment schemes to help people pay those debts back when they've been closed down through lockdown and things like that. We had a lot of work to achieve that. Most of the tenants have now come through that and out the other side, and they're paying back their deferred period of rent. So that's really promising to see as they sort of like bounce back. But I think we've got a long way to go. I think the commercial property market's got a long way to go to see a full bounce back to where it was pre-COVID. I wouldn't even say that this time in a year's time we'd be in a position where we could probably have got the rental income back up to sort of where it was sort of like pre-COVID. I think it's going to take a long time for yields to recover. I think it's going to take a long time for investment markets to recover. Those changes in the investment markets, we all know what's happening with the high street situation, and obviously with the retail and hospitality sector being affected more than any sector in the commercial property market. So I think there is some market sentiment that shows there is interest. You know, there is still some interest. There is deals being done. There is lettings being done across the whole of the country. We've got to be agile enough to respond to that and sort of like make sure our property portfolio is responding to the market to create those, to improve those rental income KPI.
Thank you both. Do you want to come back, Philip? No? Good. Okay, in which case I will briefly discuss the right that we have to exclude the press and public. Section 100A of the Local Government Act 1972 gives this committee the ability to exclude the press and public where it is likely that there will be a disclosure of exempt information, and the committee weighs that disclosure of the exempt information the detriment of the disclosure of that exempt information outweighs the public interest. In this case, the paragraph 3 is the relevant paragraph from Schedule 12A. That is that this would provide likely disclosure of information relating either commercial information relating either to this council or another individual. In this case, it's the individuals that Councillor or persons that Councillor Burt referred to in his question. In my view, I think we should vote to go below the line because I don't think the public interest outweighs the detriment to those persons. But I'm happy to hear any comments to the contrary. Councillor Burt.
Thank you. You knew this was coming. So in the appendix, in the restricted appendix, it's already been redacted, the actual names of the businesses involved. So I am querying whether that cannot be disclosed anyway. If we don't provide sufficient information for the general public to see, how can residents possibly make representation to their representatives as to the business of this council? And therefore, I would like to not go below the line on this matter.
Thank you. I note your comments. It is obviously a matter of judgment to weigh up the two competing arguments. In my view, I don't think the public interest outweighs the detriment to the individual persons. I also think that it would be easy for residents to test whether or not they can get that sort of information by applying through freedom of information. But I don't believe that it's this committee's decision as to whether or not that information should be released at this time. So I'm going to propose that we do go below the line. Do I have a seconder? I have Councillor Turner. Could I see all those in favour of going below the line, please? And all those against? Thank you. That motion is carried. If you wait just a short period while Ruth sorts out the streaming